All right, welcome everyone. It's our second call in the series. It's great to see people joining the call. I mean, this community's been around for a couple months, and this past week we just surpassed the 300 member mark, which is, I think, pretty amazing in the short term. And we have some active members, and I appreciate any and all engagement in asking questions, posting comments, and sort of supporting each other. Because as Thaddeus said last week, this needs to be a collaborative space. You know, a rising tide, rises all ships. So I think that's a positive for all of us. So keep engaging, and if you know anyone wants to join the community, we'll record these calls, and you can just feel free to send the link out and encourage anyone you know to join the community. It's a free community. We're not asking for anything, so we just want people to engage and bring their insight and help each other succeed. So, today's topic is buy it or build it. And Thaddeus and I just had a conversation earlier where it's he's gonna look at the development side. It is hard to support development when we're all sitting here complaining about construction costs and land costs, and we all know that this industry needs development, but it's hard to develop. So then there's the acquisition side, which I'll cover after that. And again, this isn't going to be theory. We're not going to sit up here and lecture in textbook theory. This is going to be from our own experience, our perspectives. You may have a different perspective, and that's great. We'll have a Q&A at the end. If we don't get to everyone, please post it in the community. You'll probably get a more well-rounded answer in the community, not just mine and Thad's perspective, but you'll get the entire community. So I think that's a great way to engage, is post questions that come out of this. And again, we'll post the video so you can send it out to anyone that missed it. So we're short on time, as always. We try to keep these to 30 minutes because everyone's weeks are competing with a ton of different priorities. So let's get to it. Thaddeus, you're going to walk us through the development side of the business. Take it away.
And nice to see everybody. Cool to see a bunch of the names that were here last week, and certainly appreciate everybody for the engagement on last week's call. A little different this week. Last week we were talking about identifying markets, but we were talking before, Will and I, and he said, this is not, and I can't defend doing ground up construction as the best and only way to go about this. I think what I would start off by saying is, you choose what your lane is, and you can't be great at everything. And so you kind of got to figure out what it is you want to be really good at and get really good at it. If you only have so much time, to Will's point about time always being short, for all of us, it's that way. I happen to work with a company that spent the last, our principal spent the last 35 years of his life building ground up deals. And so that's kind of where our expertise lies. It's where we think we have the greatest advantage to the market. And so that's kind of where we want to spend our time. But I think it's important that you acknowledge what the challenges are. Everyone on this call has seen the rise of small bay flex as a asset class and seen the growth of the interest in it. Why has that happened? Well, there's a material shortage of these facilities, which is creating the massive increase in rents that we've seen in the last 6 years, right? A lot of markets have doubled rents, maybe even more than that when you start factoring in triple net markets and the increases that have happened in taxes and insurance that are being passed on to tenants. So why does something like that happen materially? Well, it always happens because of supply and demand. Then we have to get into, why is the supply short? And I think this is really important to understand when you're talking about small bay flex. There's we know it's short. We were talking before the call started live. Yeah, I might be mispronouncing your name. I'm going to go with Yag, but I could be way off. Yag was on with us earlier talking to Will, and feel free to chime in and tell me if I just massacred your name. I apologize. But the point is, why is that shortage? We see vacancies that are very low, right? 3, 4, 5%, which is essentially no vacancies when you account for lease turnover and people moving out naturally in a life cycle of a business, growing their business to a new space. You're going to have 3, 4, 5% vacancy. In fact, you should have 3, 4, 5% vacancy. If you have 0% vacancy in your facility, what is that telling you in a market? Anyone care to chime in so I don't have to just talk nonstop?
Your rents aren't high enough.
You're not pushing rents, right? You're not challenging what your capability of, and you can be leaving a lot of money on the table if you're doing that. So anyway, what does this have to do with development? Well, the biggest problem that we have in development in Small Bay is there are always going to be other uses on a piece of industrial land that can cover more of a lot, period, that can get more building space to lease up than Small Bay Flex can, especially what I consider Small Bay Flex, which is 1,000 to 2,000 square feet units. The parking ratio we need, the drive aisle space we need, the style of building that we need, especially if we're going to try and avoid putting sprinkler systems in and do what municipalities require for sizing and for firewalls to make that happen. You just can't cover a lot as much as you can with some other uses. We come out of the self-storage world, and self-storage can get so much more coverage. They can go multi-story in a lot of instances. Even if they don't go multi-story, they don't need anywhere near the level of parking spaces that we would. You can have 150,000 square feet of self-storage, and you might have 20 parking spaces on the entire complex. The only reason you might have more than that is if you made them on purpose to rent for more money, for more income, right? Whereas on Flex, I got to have a parking spot every 500 square feet. So there's a fundamental restriction on what I can do as far as lot coverage. And it's why we have a scarcity of the product. Now, what's the upside of ground up development in our eyes, and why do we see it as a fit? Well, right now we know that storage operators are struggling to find places that make sense that aren't already oversaturated. Big box industrial is starting to slow down a little bit. A lot of these big spec buildings are still empty. So you're seeing some of that product type slow down. So that opens up some areas in the country for us where the rise in prices of lease rates, and especially in markets that are triple net, are allowing a price where it starts to look really attractive. And I'll lay cards on the table that I probably shouldn't share with you. But as we underwrite these things, we're underwriting storage projects right now that we're lucky if we can get to 17, 18% return to an LP, which is hard to raise money on a ground up construction development when you're talking about a 6-7 year turnaround, 5 years in a best case scenario. That's a hard sell to somebody, even with the longevity of the success of the storage industry. Keeping in mind that we're underwriting those to a 5 or a 6 cap exit. 5 cap in primary markets, which is still happening very, very regularly in the self-storage industry. 6 cap in secondary markets, which is still happening very, very regularly. That's not a aggressive underwriting model based on what's actually happening in the transaction market and storage. We're underwriting flex deals to a 7.5 cap exit, and we're seeing better returns on those deals ground up in a pro forma. And again, this is the fun of ground up development, right? It's a pro forma. It's not reality. It's what you think is going to happen. It's what you're projecting to happen over time. We're seeing those pro forma returns significantly higher, not 10 points, but 5, 6, 7 points higher in select markets. Hopefully you guys saw last week's call. If you didn't, watch it. And I talked about how do we identify those markets and what's the work that has to go into it to make sure that what you think is going to happen is going to happen. That's the upside for Flex. Not every market is capable of having ground up development. Will's talked a lot about Cincinnati and what the reality is there. The simple fact is, and I use the simple rule of thumb, guys, if you can't be relatively confident that you're going to get $15 triple net in a market, you might not charge triple net. You might charge $19 modified gross, whatever that, whatever it works out. How you choose to structure your leases is a conversation further down the road. But if you look at a market and you can't reliably feel like you're going to get $15 triple net, don't spend a lot of time looking for raw land there. It's not worth your time to do it. Now, the flip side of that is if you're at $15 triple net and you want to do ground up development, you can't be in Orlando, Florida, where they're charging $1 million an acre for industrial land, right? So that's the balance that we're fighting with ground up development. Al mentioned earlier, you got to go, if you're looking at value add acquisitions, you got to go pound the phone and find the guy who's a tired landlord who's ready to sell. Ground up development is the same slog. It just looks a little different. I got to look at 100 pieces of land to find one person who A, is willing to sell it to me at a price that makes sense. What's the second part? Anyone want to throw in B? That's just as important from the ground up development side of it. I need the seller to have something else that they're willing to do.
The zoning?
Not only price, it's got to be zoned right. There's another piece of it too, which I urge you, do not make this mistake.
They want to get, you got to have the time to get all your permits. That's what I would do.
Great.
6 months or a year to get all your permits in place.
Graham just nailed it. I'm not getting building permits in 12 months unless I'm in the most user-friendly municipality in the country. But what I really want to have is I want to have my site plan approval, right? I got denied last year site plan approval by a township on a use by right product. I lost 5-2 on a planning board council. It's completely illegal, but I had no recourse afterwards because I didn't have a contractual thing on the land anymore. I either had to buy the parcel the day after, I had to go hard on my money, or I had to cancel the contract. And once I lost the contract, I had no recourse to sue the planning board. So they won. They didn't want what I was going to build. It was by right in the zoning. Imagine if I'd bought the land before I had that site plan approval. So I need those couple of things from a seller. I need to have price that makes sense, and I need to have them allow me a timeline that lets me go get a site plan approval. Building permits I'll get. I would love to have that timeline too if I can get it. But as long as I get my site plan approval, the building permits is about crossing I's and dotting T's. I'll get there. But I absolutely want to have site plan approval. So couple things. Know the market has rents that make sense. You've got to get a little bit of scale. If you're trying to build 30, 35,000 square feet, it gets very hard to pencil long-term. Very challenging. On the flip side, do I want to be the guy that builds 120,000 square feet in a market and goes to explore to see whether I can lease that whole thing out? That gets to be a little bit of a scary jump too, right? Storage did that gradually. Storage started with like 30, 40, 50, 60,000 square foot facilities when you could get away with building that small. And they started to learn that they could build 100, 120,000. Now they're learning that that's not so fun anymore. So those are your balances, and it's not an easy balance to go figure out an answer to. I'm going to shut up now because I've taken up my 10 minutes.
Well, I appreciate that. I was wondering if you were just going to get the whole distance and I was going to get any time. But hey,
I gotta let Will Skillman talk a little bit.
I appreciate the perspective on that because I think we're all trying to figure out how to develop, because I think the supply demands that we build at some point. I was ambushed yesterday on a development that I've been working on for a year. We had a TIF that was a shoe-in, a slam dunk, so to speak. And I got ambushed yesterday that a new council came in and just rejected it flat out. Didn't have the right information and said, we don't feel like we're going to review this. So now I've got to go back through resubmission. And it's one thing after another with development. And the TIF was going to make up for, that was going to bridge that gap in costs to build. So that was something that we cannot build without it. So, but it's interesting. The municipality needs to be a partnership with you in this, in the sense that they want it, they want to make it happen, and then the TIF or CRA, usually a TIF in commercial, is part of that partnership, which allows you to bridge the financing gap. So, acquisitions, they aren't necessarily safer than development. I think it's a different risk profile. You're paying for certainty, existing cash flow, known basis, instead of building it from the ground up. And I think there's a spectrum of acquisition type deals, from light value add, heavy value add. You can buy properties into additions on buildings. You can do expansions if you have extra land, and complete redevelopments. You can do environmental, brown space redevelopment. So, the whole spectrum. So what I focus on is value add, which is what I'll talk about now, because I think it's the easiest, least painful way to get into the business. But really, the hardest thing for me to get around with development, get my head around development, is the amount of risk up front, right? So value add, I'm going to have some earnest money, which is refundable, right? I've got a survey, an appraisal, a phase one. I might be out 10 grand tops, maybe 5 grand, other than the earnest money, right? And so
trying to rub it in now.
You can walk away with that. In development, I've got a 96,000 square foot development in planning right now, and with engineering and topo surveys and wetland delineation studies and soil tests and attorney's fees for TIFs and on and on and on. 100K out the door before you put a shovel in the ground, minimum. And if you're getting full CDs, obviously it could be 2.5, 3 times that, depending on the size of the project. So for me, as a value add guy, and I've done it in single family, multifamily, mobile home parks, and small bay, the risk profile is really hard to swallow on development. So I really love acquisition on that. And the timeline's shorter. I mean, 90 days, I can have something from contract to close, and I can have my guys out there the next day, tearing the building apart and putting it back together. So I think the best way to illustrate this in my market is I'm going to walk through 3 deals that we purchased this year, and I think they're a good. I'll do them quickly at a high level, and we can answer questions at the end of this, or you can post them in the community and I'll answer them. But in not really this year, December 30th, we bought a building to take advantage of bonus depreciation for last year, which is a whole nother conversation that we can have on taking tax advantage of this space. And the bonus depreciation is not nearly as nice in warehousing as it is in multifamily or mobile home parks. So just be aware of that. First building we bought was 13,800 square feet in Carlisle, Ohio, which is between Cincinnati and Dayton. Bit of a tertiary market. I needed to close quickly because I wanted to get done by the end of the year. So I did bridge financing, not really bridge financing, kind of private financing, financed at 100% of the deal. We paid $42 a square foot for a beautiful pre-engineered metal building. It'd been built on, there's 3 additions. So there's different ceiling heights, which was perfect for subdividing. Huge concrete parking area. I mean, it was a beautiful building in great shape. We invested $75K into dividing it into 5 units. We put heat and air in every unit. And we subdivided all the electric and water. So we have sub-meters. And we're in the process of finalizing the final lease now. And the rent will be $11,000 a month. So that's $950 modified gross. Tertiary market took much longer than I thought to rent it. But the time frame from that deal closing to refi will be 9 months, right? Second deal we bought would close in April, 14,000 square feet in Blue Ash, Ohio, which is a primary industrial market in Cincinnati. We paid $65 a foot, building with deferred maintenance. It was a machine shop. They've been in there 20 years. So it was dirty. It wasn't well cared for. The owner didn't invest a lot in it. Paid $65 a foot, $910 all in. I wanted to pay less. The seller wanted a bit more. So I combined conventional financing on this with a seller's second of 10%. So we only need to bring 15% to the deal, which we could pay a touch more, but it protected our IRR over a 10-year hold. You can argue that it's absolute dollars versus IRR. I think the deal, being in a primary market, was worth spending a few dollars extra. Put $60,000 in deferred maintenance, which the bank financed. The tenant was in place. We're re-signing them on a 3-year renewal, converting them to triple net. So they're still about $1.50 under market. But we didn't want to kill the tenant. We want to come in and say, hey, I know it's going to cost you $200,000 to move your shop, so we're going to hit you hard. Tenant relationships are a huge part of our business strategy. And again, that's a topic for another day, because I think that is top of my list as far as building relationships for sticky tenants and driving bottom line. So we didn't kill the tenant on that. We raised the rent a little bit and converted them to triple net. Works for us. If they move out, we put a few more dollars into it, and we probably raise the rent $2 a foot. So long-term upside. Building we recently acquired was in Fairfield, Ohio, 7,200 square feet. It was listed for $700K. We got it for $475. We promised a really quick close. Again, $66 a square foot. We use conventional financing. My regional bank has all our information, and we've been through the process. So it's a really quick process. We ordered the appraisal on the phase 1, day 1, and it just really goes quickly. We put $50,000 in deferred maintenance in that, again, financed by the bank. It's currently for lease. We've literally finished renovations yesterday, and it should lease for $950 triple net. So time frame and deal of that deal is 4 to 5 months all in to refi from close. So again, we're buying deals in our market at a fraction of replacement value, 42, 65, 66 a square foot. And we're in them $50, $75, $76 a square foot after renovations with a tenant in place. So for me, if I could find enough of those deals, that's where I would spend my time. The problem is I can't find enough of those deals in my market. The brokers, as we talked about earlier before the call started, their job is to get as much as they can for the seller. So they're putting stuff out at $130, $170 a square foot, which is, they're looking for an end user, right? And and as an investor, I can't pay that. So with the one in Fairfield we bought that was on the market for $700, we waited. I called the broker every week, and when they didn't get that owner occupant servicing, we had been in communication with them and told them what our number was, and we got to a number that was agreeable on an investor rate, and so we were able to do that deal. They don't always work out that way, but I think buying at a fraction of replacement value is a benefit. And I think, we did 3 deals in the first 6 months of this year, complete cycle. And I've been working on a development deal for a year, and I just got my TIF rejected, right? So, and we're not even in engineering yet. So, you can see the difference there.
Someone judging this call, I'm going to say who the winner is, because I think I just got punched in the face.
Well, all that said, that's a great segue. I got into this space to develop. I came out of the mobile home park space. We wanted to develop. And, we bought heavy value add, and then we actually acquired some land in Fort Wayne, Indiana. We wanted to develop. And then the cost of capital 2 years ago went through the roof. And so we couldn't develop from the ground up. All that capital, patient capital, went away. So I got into this space thinking, all right, I'm going to develop. And it was like watching paint dry, trying to get these developments out of the ground. So I went back to what I know, and what I've always done is the value add deals to fill in the gap. And now it's become my primary strategy. But then summer hits, and I can't find any deals because no one's transacting. So now I'm back to looking at development. So it's like I can't do one or the other and fill my plate in my market. And again, Thaddeus, you mentioned this last week, I stick to one market. I'm not, you guys are national. I'm in Cincinnati, Dayton, Columbus. Like, I'm in a really tight market. And so there just aren't that many deals. I talk to every broker every week. I think they're annoyed with me, but it is what it is. I've got to pound the pavement. We send out hundreds of letters a month to a very targeted list. We follow up on phone calls. Getting information, accurate information, is difficult. I think, Al, as you mentioned it, finding the deals is the magic in this space. So I feel strongly that the best risk-adjusted returns are a combination of both development and value add. But you have to have the stomach for it and the patience for it. But if you're looking for the path of least resistance, I recommend you start with value add deals. It's just a way to get in quick and start generating some income and make some money. Development takes quite a bit longer. So I know these calls are short and quick. I hope any of or all of that was helpful to those of you trying to decide, where to get started in the business. So I wasn't here to say value add was better than development, because I would prefer to develop. But for me, it has certainly been, the all-in winner so far. I think development just takes it's a different animal altogether. But as soon as construction costs come down and land costs level out, I think, and rents continue to go up, I think there will be an equilibrium where we can develop. It's just a matter of time. So anyone have any questions? We can field some questions for a bit, and then we'll end the call, and you can put the rest in the community.
So, Will, I have a quick question. You're big on AI, and I think pretty knowledgeable about, integrating that between, FaceTime, so to speak, and using the AI. Have you come up with any kind of things? Has anybody in the group come up with anything on trying to find available assets through using AI? I've been struggling with that too. That's why I said the driving for dollars. I'm looking at a couple of young guys that are off for the summer from college, and I'm thinking about putting them on the road and start taking pictures and, kind of driving some of the plots.
I honestly think the only way to do it is do it all, right? You're going to drive for dollars. You're going to dial the phone. You're going to send the letters. You're going to do you're going to market on Facebook Marketplace or where, whatever you do. We've built some scoring systems that, we put lists in. It's easy to go on the auditor site or some of these other sites and get a complete list of the properties zoned accordingly. It's a different animal to get accurate information for seller phone numbers and emails. The only information that is truly accurate across all platforms is the tax mailing address, because that's where they get their tax bill. We're in the process of building an AI to scour different sites to build a more accurate owner phone number and email, but it's in its infancy. And to be honest, Al, as much as I like you, I wouldn't share it with you right now because, I need my own leg up in the market. But at some point, yeah, I would share it with you if we get it dialed in, because I'm only in my market. So, but yeah, I think that's the challenge. You have to do everything and anything you can. You need to be in the market, talking to brokers, talking to owners, doing this sort of thing. You need to do a comprehensive, all-in approach. So,
Yep, I agree.
Will, I had a question about that property you posted on LinkedIn about subdividing. Is that the same property you were just talking about? You spent 75.
yeah, that's the first one I brought up. Yes.
Do you have any more details in the community on like what that looked like, as far as like how much you to divide the walls and spend on MEPs, things like that?
Yeah, we spent 75 grand subdividing that, but we put heat and air in 3 of the 5 units, so we spent a little extra on that. It was one of those pre-engineered buildings that had 3 additions to it, right? So it was we just framed in some openings. In subdividing the electric, that was kind of semi-done when they did the addition, so we just had to clean that up and add new lighting and HVAC. So it was a pretty simple subdivision. But yeah, I mean, if you want, reach out to me. I mean, I'm welcome to I'll walk you through the whole thing. I mean, it wasn't a very sexy deal because it was kind of teed up for that. But I think it was, I mean, to take a $42 a square foot building and get 11 grand a month out of it is, in my opinion, I mean, I would do nothing but that. It was a home run.
Yeah, this is a slam dunk. I might be looking at a deal. It's a little bit smaller market. I'm out of Indianapolis, but it's a little bit smaller market for me. I just got a call on it. Insurance broker that I know, basically tired landlord. It's a single tenant building. I'm like, if we could get it at the price that you're talking about, like $15 a foot, something ridiculous. And I was like, look, I mean, I'll throw 100 grand at improvements to subdivide it. Again, it's a single tenant building though. So how much work am I really going to have to do with firewalls and this and that? Like, so I'm just trying to figure out like super high level if it's worth getting under contract.
I mean, if it's cheap enough and the numbers work, it's certainly worth doing. I mean, deals are tough to find right now. If you can, and maybe that's a more of a heavy value add because of the amount of money you have to put in it, but I think that's the deal worth looking at. I mean, if you want to look at it together, I mean, I'm right down the road. I'm not that far from you.
No, that'd be great.
Certainly take a look.
No, that would be awesome. Yeah, I think might be just seeing it first look. And what I told my friend that's connected to the owner, I said, we just need to lock this down. We need to get control immediately.
Well, that's it. And then you do your due diligence, and then you put 3 outs in.
Yeah, I mean,
$15 a square foot doesn't cover my geotech phase 1, Alta survey, permit, site plan approval, CDs. Like that's hard to beat.
Yeah, just get it locked up and off the market.
Welcome to the Midwest.
I mean, if it's what I think it is, and it's multiple buildings, the one thing I don't like is parking, but like, honestly, I probably won't care if I'm going to get it at this price. Yeah.
I mean, you could do a ton of work and be in at $40 a foot.
I mean, that's a really good point about, one of the challenges between acquisitions and ground up development is acquisitions are always beholden to what the existing product is. That's just the reality of what you're getting into. And it's why you're going to try and buy at a discount to build cost. The one thing I love about ground up development is I get to build exactly what I want to build, assuming I have a site that allows me to get that much room.
Yeah. Yeah, I was curious what you guys said about the land costs in Orlando being $1 million. Indianapolis has been creeping up dramatically. We're at like 400 plus if you're going to look at I-3 land for that's like medium industrial where you can do lay down yard. 400 grand.
It's hard to justify on what we're building, honestly.
Yeah, exactly.
I mean, I just, as we talked about before the call, I just spent 75 an acre, and I was upset about that.
We need more places to put moratoriums on data centers, quite frankly. We need that trend to keep going. We'll get
Yeah.
cheaper land.
For sure. I appreciate it. Yeah, I'll reach
Zach,
out.
Zach, did you have a question? I think I saw you earlier. A question, or was that answered?
Yeah, Thaddeus got to me. I appreciate it.
Yeah.
I was just seeing if you guys kind of had a back of the napkin for, kind of parking per square foot of building. But I think that, 1 per 500 foot, is pretty standard.
The more the better, to be fair, if you have space for it, in my opinion. I don't think you can have enough
Exactly
parking.
how I answered him, Will. I said 1 to 500 will usually get you there, but if you can get more, get it.
For sure. Appreciate it, guys. This was a great call. Just a little bit of background about myself. Our group, we started in the self-storage space, sourcing off-market deals. And over the last year and a half, we've been targeting flex space. So we've done about 12 assignment deals in the flex space, sector. So we'd love to, work with you guys and help you source off-market value add deals wherever your market is.
Zach and I are kind of working on
Hey,
an
Zach.
assignment deal. I had someone that was looking for something that Zach had, and I put them together. So I think that's what this community is about, really. Just how can we
100%.
help each other succeed?
For sure. And feel free to hit me up, guys. I mean, I have my information on this school community. I haven't really been too active in it, but I've just been, trying to keep my head above water. But, but this is super awesome. I think it's great to connect with everyone. But Scott, were you saying something?
Yeah, I was just curious with the best way to connect with you. You just answered the question on school. So we're
Cool.
based here in Charleston, and looks like a couple of my partners are on the call as well, Paul Santana and Harris Jones. We're primarily focused just for the broader group at this stage on value adds, triple net, flex. So yeah, appreciate that contact, Zach. Thank you for hosting, Will. Before we go, just maybe the next call, we can, get the collective feedback from the group on industrial outside storage. That's another area we're leaning into as well.
Yeah, I'm interested in that. We'll add a call on that. I think that's, we laid out, Thaddeus and I laid out the first 10 calls, and I think after that, we'll take some feedback, additional feedback, and continue to add to the call. So well, let's take a couple more questions, and then we'll leave it to the community. You can post the rest of the questions there if you have any.
I want to ask Daniel Quezada what it was like to be in Mexico City for a World Cup game.
Bro.
It was awesome, dude. I mean, we just it was kind of a last minute trip. So I live here in El Paso, Texas. So it's very easy for me to just cross the border and fly in to Mexico City. So we flew national. But it was just flew in on a Saturday night and then flew out Monday morning at 6 a.m. So we literally just stayed. I don't know if you guys are familiar with Mexico City or saw kind of the visuals, but they just have that main boulevard where they have the Angel and where everybody was basically gathering. So we just hung out there the entire time. We just stayed in a bar and ate tacos and drank beer all day and watched soccer. So it doesn't get better than that.
That's awesome.
That's
Yeah.
awesome.
Sorry, I did a
England.
complete topic change. Yeah, England killed me, Will. England killed me.
Oh, I know. I got a question for you, Thaddeus. So, is there a benefit of zoning in development? I've always looked for
1,000,000%.
industrial zoning. Is there a benefit to having commercial zoning because of the tenant base, right? So I've got some industrial buildings where I have tenants come in and they want to do a gym, and I have to get a non-conforming use. I have a cheerleading training camp that has to get a non-conforming use. It takes 6 weeks to get it leased up. So is there any advantage to having a commercial zoning where you have a broader context of use? I know the cost of land zone commercial is more expensive, but the tenant use is
It's not
broader
just
as
the
well.
cost of the land, it's the pain in the ass with the city of how you're going to have to build it to conform to standards and what it's going to do to your build cost.
Gotcha. Okay.
That's the challenge. And so it just becomes, are you going to get the rents to cover not being able to do a steel panel? When you all of a sudden, just to give context for everyone on the call, I can put steel panel on for $4 a square foot of build, right? If I got to go do masonry, I'm at $20 a square foot of buildable space. Right. So if I'm in a commercial district and they're more strict on what it's got to look like, a lot of times they're more strict in parking ratios. All of a sudden I can't build as much building. So it's not so much the uses I'll deal with the 6 weeks to get a non-conforming use in the industrial zone for my gym guy, rather than spend an extra $50 a square foot on the build and not necessarily be able to get 100% of that space leased to the type of tenant that needs the commercial space.
Perfect. That's a great answer. That answers my question. Anyone else have anything else before we end?
Appreciate everybody. Will, again, man, thanks. It's so grateful for what you're doing here. It's awesome.
Well, I appreciate your help. I can't do it without the community as a whole. This is, again, I'll say it again, this is not my community. This is everyone's community, and I want everyone to feel like it's their community and engage accordingly and help each other out. And, you know, if someone says, hey, I'm looking for this, and you know someone, you know, introduce them and be helpful, collaborate. So I appreciate it, and we'll see everyone next Friday, 11 o'clock.
Thanks,
Appreciate
guys.
everybody. Have a great one.
Thanks. All right.